What's going on YouTube? I just want to make a quick video to explain to you how to underwrite your first real estate investment property. Super important to understand the numbers, making sure number one, you qualify for the payment, the property is exactly what you're looking for, you understand the back end on how the financing is approved, and overall just making sure this is the right investment for you. Because this is a big transaction for most of us. So you want to make sure you cross your T's, dot your I's, and the deal makes sense, right? Deals are really made on the buy side. People don't realize this. You don't make money in real estate when you sell. Yes, you do make money, but when you buy, because when you buy in the beginning, if you buy it at the right price, okay, and then you go into be not as specific, but forced appreciation and things like that, get to write off stuff, increase the value, you're going to make a tremendous amount of money when you trade that property out. So if you didn't watch my last video, please watch it. I basically explained to you the beginning parts of real estate when it comes to investing. Okay, it's a great place to invest money. If you have the capital or you want to start off, you understand what it takes to do it, connect with real estate agents. They have access to the properties you're looking for. So let's get into the underwriting. Like I said, thanks for joining us. Let's start. Okay, so the first step is you basically identify the property that you fell in love with, right? It's a multifamily, um, it's in a good location, the property's in good condition, um, it has tenants in there, it could be also vacant, meaning there's no tenants in there. So you identified that property. You said, hey, this deal, I like it, it looks good. What does it take as far as financing? What am I looking for? How much money do I have to put down? Does the numbers make sense for me? Okay, so first step is price. I'm gonna write this out, just easier for me. Let's use an example. I'm gonna use an example um, for where I live because I understand my market better than most markets. The average multifamily where I live, on average, a decent place, it's gonna cost you anywhere from 650 to 875 range. Okay, so let's just start with a 650 price. You want to write this out, guys. I'm telling you, write this out. It's easier when you write things on paper. You see the numbers for yourself. Okay, you buy something for $650,000. The most important thing to this is what is your down payment going to look like? If you're going to use FHA, okay, which by the way is one of the best programs out there, you have to keep in mind your down payment on FHA is 3.5%. If you're going to do conventional, you can go anywhere from, depending on the lender, from 5 to 10 to 20% down. Okay. You can also do it by dollar amount. Depends on your credit and things like that. I'm not getting into specifics on that because I'm assume that you have that already set up and you understand kind of more or less where you stand, or you already secured financing. Um, so let's just use an example. Like I said, $650,000 house. You're going to put, let's say, $50,000 down. Okay, you worked hard, you saved it, you're putting $50,000 down. The next question when you underwrite this, you need to figure out is, okay, if it's $650,000, what's my taxes? Super important because it's a liability. Taxes have to be paid every month, right? Uncle Sam wants to be paid, the local municipality. Where I live on average, taxes are anywhere from low end sevens, eights, all the way up to $20,000, $30,000. The average where I live is roughly on a multi is $12,000 a year, which is $1,000 a month. We're going to use that as the example of 12,000 a month. Remember, the super most important thing here is because price is somewhat irrelevant in the beginning because you could pay any price you really want for an investment property. It's just going to come down to the return because you don't want to buy something where you're actually negative cash flow every month. Okay, you're looking to build generational wealth. You're looking to create a retirement plan. You're looking to start a new career as an investor, right? Like people don't put their money into things looking to lose money, right? So, like I said, focus on the return. Does it make sense? In real estate, historically, prices have always gone up, right? Yes, 2008 was a little bit different, but historically, prices go up, right? It is an asset, it is traded. Like I said, focus on those two things. So, back to the example, $650,000 house or a multifamily. Let's say it's a two family, very common. Okay. Taxes are 12,000. Okay. Your down payment is 50K. What's the monthly payment? Let me get my calculator out. So 650,000, 50,000 down, which comes out to be, that's roughly 7.5% down. Okay. You could play with those numbers. Let's say you saved up, I don't know, 10%. What's 10% of this? So 670,000, yeah, about 69,000. Yeah, about 69,000. Okay, let's just stick with the original example. So 50,000. Today's interest rates on a 30-year fixed rate, on average, you're going to be somewhere in the range of like I would say a 6.6, 6.7. Let's just be realistic here. Let's go to 7%. Okay. The reason why I say 7 is because rates actually went above 7 not too long ago. Assuming you have good credit, let's say 700 minimum or close to it, you have homeowners insurance, which you have to take into consideration when you buy a multifamily or any real estate property. Homeowners insurance on average, let's say, is $1,500 a year. You have PMI and things like that are added into it. Okay, so the price of the property is $650,000. Taxes are $12,000. Your monthly payment on this property with $50,000 down is $5,507 per month. Right there, yeah. $5,507 down. That's how much it is per month. Okay. This doesn't include, you know, electric, gas. No, no. This is just your monthly payment to the bank. Okay. Now you have to sit here and say, okay, I'm okay with this monthly payment. It makes sense. I love the property. I can afford the monthly payment. Because what you don't realize is to get approved for the financing piece to this, you have to qualify for the payment. Okay, it doesn't matter about the tenants. It's first about you. So assuming you qualify for this monthly payment, you got to ask yourself, okay, I'm able to make this payment. What am I going to get back in rents? Super important. You need to do your research, okay, depending on where you live. Okay, what is the average rent for these investment properties per month on average? Okay, back to the example where I live, on average, rent depending on the bedroom count is going to be anywhere from 1,800 to $2,200. So a two bedroom, one bath. It's going to give you somewhere around, let's go with a low number or a middle number, 1,800. It's a multifamily, it has two. So multiply this by two. Now that you understand that you have two properties, they're going to generate income because you're not going to live in the property, right? This is an investment property. And by the way, I'll give you a tip. When you do apply for a loan and it is investment property and the bank says, hey, are you going to occupy this property? Say yes. Don't tell them no, because then your down payment is significantly higher, typically 20%. So just tell them, hey, listen, yes, I am occupying one property, one residence, or one apartment of the multifamily, okay? What they're going to do is on the underwriting is they're going to take into account a percentage of the monthly rent on average. If you have a good real estate agent, they can submit to your lender higher rents, because if they submit higher rents to the lender, okay, showing that, hey, really this unit typically rents for, let's say, $2,600 a month, they're going to take roughly 50 to 75% of that, okay? So let's just say they take, I would say, somewhere around 50% It's actually higher, but I'm trying to use numbers that are like worst case scenario, so you can kind of understand why it's important to always look at worst case scenario. Because remember, this is a big transaction. So if the rent is 1,800, okay, and then you're gonna do is half. The mortgage lender is gonna consider half. That's $900. It's not $900 times two for both units. It's actually just $900 in general, because you're going to occupy the other side of the unit. If you were not, okay, and you had the 20% down, then they would use both, okay? So let's just say the rent is $1,800 for this 2 bedroom, 1 bath. So 900 of it is what the bank's going to consider, or possibly a little more, maybe $1,200 of it. It's really more 60 to 75% of it. But in this case, we're just going to use 50%. So $900. Let's write this out. $900, which is half. Okay, $900 is half of it. Now, the monthly payment is $5,507. We agreed. What they're going to do is they're going to minus from this $5,507 the 900, okay? Because they're counting that as the cash flow, okay? So out of that is going to be, sorry guys about my math, just out of it today. Oop. So $5,507 minus the 900 leaves you at 4607 actually. So 4607 is what you're responsible for. Okay. But remember, you're renting it for more money. Okay. You're getting more than $900 a month. For this deal to work, okay, and to make sure it's a good investment, you're taking still into consideration the $1,800 times two, because you're going to have two tenants in there. So the total 1,800 times two is 3,600 a month. So you're going to collect in total rent, okay, rent is $3,600, okay? But your payment is $5,507. As you write this out, you're going to realize, this math doesn't make sense. I'm negative, right? I'm literally negative almost $2,000 or more. Does it make sense to buy this deal? The answer is no. No. The only way it makes sense is if you do this. You increase your down payment. Okay, you have to increase your down payment or the rent. Okay, the rent needs to be higher. Okay, if the rents are, let's say, we're going to use realistically kind of what the prices are here by me. Let's say the rents are $2,200 a month. Okay, on average, that's $4,400 a month. Your payment is still $1,500 out of your pocket. The deal does not work. You get what I'm saying? It all comes down to the math. Does it make sense? Now, yes, you could increase, like I said, the down payment. You can bring this up to 100,000 if you have it, 150,000, right? You got to play with the numbers, because the reality is, guys, and I'm only speaking about where I live, there's no way in hell you're buying a multifamily, at least 2 units, for less than 650. It doesn't exist. Unless you're in the worst neighborhood and it's a piece of shit, and you'll be lucky if the tenants pay you rent the first month. Right? It's not going to work in that case. So understanding the underwriting, how to come up with the math, does it make sense, how to prepare the math, so when you do submit to a lender for the underwriting process after you selected the property, to make sure it gets approved. Investing in multifamilies is great. It's a great tool to use long term, but you got to do the math, because if the math makes sense, you have to pull the trigger. In this case, I'll give you the example. This deal would probably work best is if you put down roughly, I would say, like I said, $150,000 down, and instead of collecting $1,800 in rent, because we know the average rent now is more than that for a 2 bedroom. If the rent was $2,200 to $2,500 a month, Where you don't realize there's a trick to this, or maybe you do, and I do apologize, is it all comes down to the interest rate. Yeah, this deal sucks, but if you can afford to pay the cash flow for a short period of time or figure a way to force appreciate to get the rents higher, okay, the smart thing to do is you refinance it. You refinance the deal when rates come down, right? Go down to a 5.5 handle. Then it's a different story. What's your payment at 5? Let's run the numbers. If you refinanced it down to a 5.5, you get 49.22 a month. See the difference? The refi is where you would make out, right? So like I said, if you're collecting anywhere from $2,500 a month in rent, yes, you do have cash flow positive to a certain point, because what happens is on the refi on 5.5, let's say you're collecting now a total of basically almost $5,000 a month in rent. Your mortgage is a little less than that. Even if it's $100, that's $1,200 for the year. Yes, you're considered cash flow positive, but then the question is, how much did you put down? If you put down $100,000, you're only collecting $1,000 a year profit. That's not a good investment, guys, right? It's not. Who's going to put up $1 million to get a return of $1,500 for the year? You're not going to do it. You can go into the stock market, you can buy bonds, right? It doesn't make sense. Like I said, it all comes down to the math. You need to learn how to underwrite these deals. They're super basic. I get it. It's confusing at first. The language is confusing. But just go back to like the basics of math, what we all learned in school. What's the price? What's the total liability, which is the payment, which includes the taxes. Okay, and what am I collecting in rent? There's a lot of deals out there when it comes to multifamilies, okay, especially multifamilies, where you can make a significant return on the buy side when you first purchase it and force appreciate the property, which is renovating the property, improving the property, um, adding new countertops and things like that, bathroom upgrades, okay, to push the prices higher on the rent, depending on the location, because that's where the money is made. You're able to collect more, okay? I'm trying to make sure I covered each piece here, and I do apologize. I'm just out of it today. Like I said, stick to the basics: price, down payment, interest rate's a big factor because you got to know if it's going to work for you or not. What's your game plan? Are you doing this short term, long term? Are you trying to flip it? Um, Whatever the case may be. Yes, people do flip multifamilies. It happens pretty often, actually. And a lot of people get into these deals and they make a big mistake. Do not fall in that trap of making a mistake. If the numbers don't make sense, don't do the deal. Granted, the market is not currently right now on a buyer's side, because what's happening is those asset prices in multifamilies are super sky high. So, like, if you want to buy a deal right now, like I said, this 650 deal, if you can find it, the numbers are never going to make sense because you're paying so much for the properties. Think about it. The deals that are available right now to buy, okay, on Zillow, Realtor, Looped In, uh, it, it's not going to work because think about it. You're paying top dollar for the property, and you would have to put down a big chunk of money just to make the numbers make sense. And who wants to really put all that money down when you could spread it across a bunch of other properties? I always tell people to do that all the time. If you got a decent chunk of money down, spread it. If it's your first deal and your first time buying an investment property, or trying to figure out, hey, does this make sense? No. Stick to FHA. It's your best friend. There's different underwriting. It's a little bit stricter, but there's ways around it to make it easier, okay? It's not really that bad. But I'm telling you right now, you got to find these deals off market. Plain and simple. I hope this video helped you guys out. I mean, I can get into really, really deep specifics, but that would take forever. I feel maybe I could squeeze it in one day, but like I said, focus on the important stuff of underwriting. It's basic math. Make sure you love the deal too. It's a good location, and decide, hey, does this make sense? Can I hold on to this for 10 years, 15 years, right? Or, hey, can I afford this deal right now? If you can, are you willing to play the long game, wait for rates to come down, refinance, possibly cash out, right? Raise rents at the time. There's a lot of moving pieces there. Add it to a portfolio. People don't, realize that you can. There's guys and girls out there that reach out to me all the time. They have like literally 6, 7 of these properties. Okay, some of them are cash flow positive, some of them are not. Some of them are negative $200-300 a month. Okay, but they're playing the long game because they know if they sell the property, it's worth a lot of money. They're just trying to package it together and time the market. So, like I said, I hope this video helped you guys out. Try to stay focused on the most important pieces. What are you paying for this property, and what is the liability to you? Hope you guys subscribe. Let me know in the comments. Until then, good luck and stay safe.